Assalamu alaikum friends. Welcome to today's topic. Today's topic is intangible assets. IAS 38 intangible assets. So the definition, you must be knowing that it is a asset which you cannot touch. It's intangible, right? It's an identifiable non-monetary asset without physical substance. That's the definition of intangible assets. Now let us look at some of the examples of intangible assets. Goodwill acquired in a business combination, computer software, patents, copyrights, motion picture films, customer lease, mortgage servicing rights, license, import quotas, franchise, customer and supplier relationships. Right? So all these are few of the intangible assets. Make sure that you go through this list because at least one of it you might get in your exam as a intangible asset, and you need to know how to deal with it. Right? You need to identify that it's an intangible asset if you get something from this list, because then only you can apply the IAS 38 rules. So now let us see how are we going to recognize intangible assets. Now there are some recognition criteria, the same how we had for our IAS 16 tangible assets, same way we have for intangible assets also, but there are more criteria are more in intangible assets, right? For example, the two more additional feature in intangible asset which was not there in tangible asset was the asset needs to be identified. Asset is identifiable. Asset is controlled by the entity. It should be something which is controlled by the entity. Asset will generate the last two we saw in the IAS 16 also for tangible assets. Okay, assets will generate future economic benefits for the entity. It should be something that gives benefit to it. For example, brand. If you're having a brand, you can identify the brand. Brand is something which is controlled by you. You can get the future revenue from it, right? Benefits will be there, and also the cost of it you can measure reliably. Then you have to recognize it as intangible asset. Okay, next let us go to see how it is identifiable. What do you mean intangible asset is identifiable? Okay, to identify intangible assets, it should be one of this. Is separable. Okay, you can separate it. So you can capable of being separated and sold, transferred, licensed, rented, or exchanged. You can either sold it, you can transfer it to someone, you can license it. Okay. For example, you are the one who are giving the license and they have to pay for you for using that license. Or you can rent it, or you can even exchange. Okay, either individually or as a part of a package. Okay, it arises from contractual or other legal rights, regardless of whether those rights are transferable or separable from the entity or from other rights and obligations. It does not matter whether you have to transfer those rights or not, or you can separate those rights from the entity or not. Okay, but there should be some contractual or legal right to it. For example, let us go through this list and see patents. Right, patent is something you can separately sold it. You can transfer it. You can license this patent to someone else. And also, it is so patent is separable, right? It fulfills the first criteria. Next one, it is arises from contractual or legal right. Yes. So if someone, you can go, you can sue someone for breaching the patent rights. You have a right for it, patented, right? So contractual and legal right is also there. Once you have the patent, you have the legal right for it. So it satisfies both. So it is an intangible asset. Okay, you can identify that asset. So it is an intangible asset, patent. Likewise, for the others also, it is the same thing. That's why they are under this list. But what happens if the intangible asset does not meet the recognition criteria? Then what? Then whatever the expenditure is there, it should be charged to profit and loss as it is incurred. It's like a normal expense only then. Okay? Expenditure should be charged to spare and profit and loss. Then you can also say it's an intangible asset. So once the expenditure has been so charged, it cannot be capitalized at a later date. So for example, in the case study or in your question paper, you might be given this scenario that once they have It was an expense because it didn't meet the recognition criteria as an intangible asset, right? And later date you feel like capitalizing it. You feel like putting it in the cost of intangible asset. You cannot do that. Okay, so if they have done it in the case study, you can say that under IAS 38, you are not allowed to capitalize it later once the cost has been expensed. Okay, that means once it is expensed, once it did not meet the recognition criteria, forever it is expense only. Note that the accounting treatment of goodwill arising in a business combination is dealt with IFRS 3 rather than IAS 38. So if you see this, there is one thing which is the exception. If you see under the goodwill list, the first one is goodwill acquired in a business combination. This is dealt under IFRS 3 because when when you have gone for a business combination, that means you have purchased a subsidiary, right? That time you calculate a goodwill, right? That goodwill is not dealt under IAS 38, even though goodwill is an intangible asset. That is dealt under IFRS 3. Okay, it is not dealt under IAS 38. So that's what this line says. Okay, next, initial recognition. So you should always know the initial versus the subsequent recognition. Okay, because initially and subsequent recognitions are different. So initially you recognize it at cost. Okay, most of the thing, if you have seen even in IAS 16 also, or most of the other assets also, initially they are measured at cost only. So this should be something easy for you to understand, the initial recognition. What about subsequent recognition? That means after you initially recognize it later on, the entity must choose either the cost or the revaluation model for each class of intangible asset. Each class of intangible asset means, for example, you have a patent. Okay, let's see from this list only. Let us pick up three classes of intangible asset. One we are taking patent, the other one we are taking copyright, the other one we are taking as franchise. Okay, so these three are different class of intangible asset. So each class needs to be revalued. Okay, if you are going for the revaluation model, not just one as not just one intangible asset and the other ones are cost. No, all the classes of intangible assets should be revalued if you are going by the revaluation model. So that's what they told. They might either choose between the cost model or the revaluation model for each class of intangible asset. Now let us go into the cost model and the revaluation model in detail. If it's a cost model, it is cost less is accumulated amortization. It's not depreciation here because this is intangible. For intangible, it is amortization. And also impairment. For impairment, we have a separate standard IAS 36. Okay, they'll be going in detail, but you should know this. What you should know here is cost less amortization minus impairment in the cost model. When it comes to the revaluation model, it is the fair value less accumulated amortization impairment. Here also you will have amortization impairment, but on the fair value. Okay. So remember one thing. This is for intangible assets, specifically for intangible assets. The revaluation model can only be adopted if fair value can be determined by reference to an active market. There should be an active market for that intangible asset. Otherwise, you cannot use fair value model. Means the revaluation model. Okay. If no active market, then use cost model. You have to use cost model. What is an active market? Is one where the products are homogeneous. Homogeneous means they are similar. Same intangible asset. Okay. Products are homogeneous. Please understand this. Remember this word. There are willing buyers and sellers to be found at all times. There are buyers and sellers for that product. The same intangible asset as yours. And prices are available to the public. Okay. So buyers and sellers are all the time there. And prices are also available to the public. This means there's a huge market for it. The frequency of that intangible assets being bought and sold is very huge. So that the prices you can get it from the market. That is known as active market. There should be an active market for your intangible asset for you to use revaluation model. Otherwise, you cannot use it. Because we know intangible asset is hard to find active market, not like your tangible assets. Buildings, machinery, you can easily find out. But what about your patent, copyright? Patent also, which patent? Not any patent. For your product, whatever the patent is. Specific, right? Specific to your organization. So it's hard to find active market for intangible assets. That's why They have imposed this rule. If you can find the fair value by that, also by referring to which market? Active market. They have clearly told. This is for IAS 38. But for some, like for IAS 16 and all, okay, where you have to refer to fair value, you might use other methods to find the fair value. But here it is only the active market you have to refer to. And don't worry, they will give you in the case whether there's an active market for it or not. So you don't have to worry about finding the fair value. That will be there or it will not be there, then use the cost model. Active markets for intangible assets are rare, right? So they may exist for assets such as milk quotas or stock exchange seats. For such things, active markets might be there. Okay, but for some active markets are not there. For example, brand. Your brand, other companies' brand is different. Brand is unique from organization to organization. It's hard to find an active market. Newspaper mastheads, music and film publishing rights. Every film is different, music is different. Patents, trademarks, rights. Okay, all these things, active markets are unlikely to exist. Just go through this list also. In case you might be given one of this in the case study. Let's say you might be asked about the brand, or you might be asked about the music or film publishing rights. So you should know that the active market is unlikely to exist, therefore use cost model. You should be able to suggest like that. So go through this list. Revaluations should be made with sufficient regularity. Same like IAS 16. Okay, such that the carrying amount does not differ materially from the actual fair value at the reporting date. Once you start revaluation, regularly you have to revalue. It's not that one today you revalue and after 5 years again you revalue. Every year you have to revalue. And what about the gain and losses about the revaluation? Remember, whether it is your financial instruments, your financial assets, whether it is your intangible assets, whether it's your tangible assets, right? Whether it is your income tax, deferred tax, whether it is your employee benefit, whatever it is, whenever revaluation is there, there will be a revaluation in gain and loss. That revaluation gain and loss, where it is recorded, you need to know this because for every standard it might differ. Okay, so that revaluation gain and loss you should know. So revaluation gain and losses are accounted for in the same way as revaluation gain and loss of tangible assets held in accordance with IAS 16. So where does it go? Where does in IAS 16 revaluation gain and losses go? You have to recall your IAS 16. Other comprehensive income. Other comprehensive income. Okay, that means OCI. Now amortization. Let us go to amortization. Remember that we went through depreciation for IAS 16. Same way now we are going through amortization for intangible assets also. But if you see the list is not too big, it's just 2 points. Entity must assess whether useful life of an intangible asset is finite or indefinite. The word you should look for is this. Is it finite or is it indefinite? Based on this only, your calculation of amortization will differ. And they will give you finite useful life, indefinite, useful life is indefinite, they will give you. So what if it's finite? Okay, if finite means fixed 5 years, 10 years, like that. So an asset with a finite useful life may be amortized on a systematic basis over that life. Normally the straight line method with a zero residual value should be used. Amortization starts when the asset is available for use. So whenever the asset is available for use, remember sometimes you will be given some information on different dates saying that you are preparing the asset, it's not yet ready for use. So whenever it's not ready for use, you cannot amortize it. You have to amortize it from the day when the asset becomes available for use. They will give you that date when the asset becomes available for use. From that day onwards, you have to start amortization. Same like how we have started depreciation. Okay, and if it's finite, it's easy. How we have calculated depreciation on a straight line basis on the cost, right? Let's say 5 years, so you divide the cost over 5 years. That's your amortization, right? So it's easy if it's finite. Most of the time it is finite. Okay, but what if it is an indefinite useful life, where there's no forcible limit to the period over which the asset is expected to generate net cash inflows? Indefinite, there is no limit. Unlimited, they don't give you a useful life. In that case, what should you do? In that case, can you amortize it? How can you amortize it? Over 50 years, 10 years, how many years? You don't know the number of years. So you should not amortize if it is indefinite. Do not. but it is still subject to an annual impairment review. Okay, it will be subject to annual impairment. Annually, you have to check whether there is an impairment of that asset or not, intangible asset. Same for the tangible asset also. Okay, but mostly tangible assets, they don't say it's indefinite useful life. Most for tangible asset, they will give you the number of years that this is the depreciation. This indefinite and finite only comes under intangible assets. Okay, we'll definitely do test your understanding towards the end of the video. Let us finish the important parts first. Research and development expenditure. This two also you have to know under intangible assets. Just okay. Just give me this thing. Okay. So, what is research and what is development? Basically, definition and all is not important. It will not be asked, but let us just see through the definition so that you can identify that this is a research and this is a development cost in your case study. So, research is defined as original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. It is original, right? You want to find out something. You're researching on something. You want to find some more information on an area so that you understand it better, and it is planned. Okay, that is known as research. Research expenditure cannot be recognized as an intangible asset, although tangible assets used in research should be recognized as property, plant, and equipment. Okay, so when it comes to IAS 16, research you can add as a cost of tangible asset, property, plant, and equipment, but not in intangible asset. So research, it cannot be recognized as an intangible asset. That means it's an expense. Should always be expensed. What about development? It is the application of the research findings or other knowledge of a plan to design for the production of new substantially improved products, devices, products, process, systems, services before the start of a commercial production or use. That means before you are actually commercially using that asset, whatever the things you are doing, developing that, you have the research. Now based on that research you are applying it. Whatever you have gone through the research, now you are applying it to develop the asset so that you can use it later on the future. That is known as development. What about the development expenditure? So IS 30 says they must be recognized as an intangible asset if the entity can demonstrate that it should have all these five things, then only, otherwise you cannot recognize it as an intangible asset. So they can intangible asset if the entity can demonstrate that. So go through this list very carefully. Project is technically feasible. The entity needs to complete the intangible asset and then use it or sell it. Completion has to be there. It's not something that is left incomplete only and never done again. No, that cannot be intangible asset. It should be completed and then either you can use it, either you can sell it, but it will be an intangible asset. It will generate future economic benefit. It has adequate resources to complete the project. It can reliably measure the expenditure on the project. Then only it is recognized as an intangible asset, the development expenditure. What about the disclosure? The amount of research and development expenditure expensed in the period. This has to be disclosed. Why? Why they started with research and development expenditure only? This is an area where most of the people try to uh, show their research expenditure as an intangible asset. They can manipulate the areas which is where they prepare the financial statements. They can manipulate. Those are the areas they always try to say that you have to disclose. Understanding? Because it's easy that the development research expenditure you can put it under intangible asset, and no one will be able to find out. Looking at the value of the intangible asset, whether it is the research cost also added or the development expenditure. Is it actually the intangible asset? Why? Because you haven't disclosed it. Why would they do that? Because if you are showing the research cost as a research cost you are showing as a cost of intangible asset, it reduces your cost in the profit and loss account. Your profit goes up, and your value of the asset in the financial statement also goes up. You see, that means you are showing that you are in a good position. Profit is up, asset is up. That's why it's more likely that research expenses, they try to show it as a cost of intangible asset, which is not allowed under IAS 38. That's why they specifically tell to disclose this area. How much is the research expenditure? How much is the development expenditure? Expensed in the period. They are looking at the expensed, okay? Because development expenditure, say research is expensed always. Development, it can be capitalized, it can be expensed. It can be capitalized if it meets the following, this 5 criteria. If it meets all these 5 criteria, not one of it, all the 5 should be met, then it is an intangible asset. Otherwise, it is expensed. So development can be expensed also, can be capitalized also, depending on whether it fulfills the criteria or not. Now, what are the other things that needs to be disclosed? Amortization methods used. This is another area where frauds can happen. Not fraud, I would say error, or you can mislead, you can manipulate financial statements by choosing different amortization methods. For example, for indefinite, you are using the finite methods, like that. So that's why the method you should say. Because for finite years and indefinite years, the method is different. For intangible assets, assessed as having an indefinite useful life, the reason supporting that assessment. If you are saying that intangible asset is having indefinite useful life, you should give reasons to support that assessment. It's not easy to say, okay, they have indefinite useful life. Do you have any evidence to say that? So, the date of any revaluations, if applicable, as well as the methods and assumptions used. Why did they say if applicable? Because revaluation you cannot use always. It depends whether you have the active market or not. Right? If you don't have the active market, then no revaluation, only cost. Then you don't have to disclose. But if revaluation is there, you need to disclose it, because revaluation for intangible asset is tough. First of all, active market. So as well as the methods and the assumptions used. Which methods did you use to revalue, and also the assumptions used? This needs to be there. A reconciliation of the carrying amount of intangibles at the beginning and the end of the reporting period. Reconciliation also has to be there of the opening and the closing balance of intangible asset. This is there for almost most of the assets that you see, right? So these are some few. Okay, so that's it. Now we are going to go through the two test your understanding. Test understanding 4 and 5. So let's start. 10 years ago, Innovate developed a video game called Our Sports. This game sold over 10 million copies around the world and was extremely profitable. Okay, 10 million copies. Due to its popularity, Innovate released a new game in Our Sports series every year. The games continue to be bestsellers. The writers have produced cash flow projections from Our Sports series for the next 5 years. Based on these projections, they have prudently valued Our Sports brand at 20 million and wish to recognize this in the statement of financial position as of 31st December 2003. On 30th September 2003, Innovate also paid 1 million for the rights to the Pets and Me video game series after the original developer went into administration. Discuss the accounting treatment of the above in the financial statements of Innovate for the year ended 31st December 2003. So, first we have to identify what is it? It is an intangible asset. So we are going to use IAS 38. So according to IAS 38, intangible asset can be recognized if two things is there. First of all, you have to see whether it is recognized also or not. So you are given the recognition criteria. Okay. One is it is probable future economic benefits attributed to the asset will flow to the entity. The cost of the asset can be measured reliably. Okay. The one is the probability, the other one is the cost. Next, so we are talking about the cash flow projections. It is suggested that our sports brand will lead to future economic benefits. So there is a chance that they are going to have a future economic benefits. However, the asset has been internally generated, and therefore the cost of the asset cannot be measured reliably. See, when you're internally generating an intangible asset, for example, brand, internally generated goodwill or brand. Okay, you are building that brand. The brand is coming from you, right? Your work is so good that it has become a brand. It is internally you have generated that brand in your organization. You haven't bought that brand. You didn't purchase that brand right from someone else. So in that case, cost cannot be measured reliably. You cannot put an cost to it. How can you say that my brand now after 5 years is this is the price. You cannot say so reliably. This means that our sports brand cannot be recognized in the financial statements. You see? So this is something new which you didn't study in the text before. Right? In the text we saw that we recognize when the cost can be measured reliably and the probable. We didn't learn this word internally generated intangible assets. Right? Internally generated intangible assets are not recognized in the financial statements. So the Pet and Me brand has been purchased, but the Pet and Me brand, this is purchased. Okay, when you purchase an intangible asset, this cost can be measured reliably. An intangible asset should be recognized in respect of Pet and Me brand at a cost of 1 million. That 1 million you can measure it because you purchased it. So in subsequent periods, Pet and Me brand will be amortized over its expected useful life. Okay, so this will be needs to be amortized also over the expected useful life. That's it. Now let us go to the understanding 5. During the year ended 31st December 2001, he spent 2 million on researching and developing a new product. The entity has recognized all 2 million as an intangible asset. So they have given the breakdown of how they have got that 2 million. Okay. Out of it, 0.5 into research, into material, then it's market research, then employee training, then development activities. Together it is 2 million. So the expenditure on development activities was incurred evenly over the year. Okay. It was not until 1st of May 2001 that the market research indicated that the market. It was not until this date that the market research indicated that the product was likely to be profitable. At the reporting date, the product development was not yet complete. You see, reporting date means 31st December 2001. Still, the product was not yet complete. Discuss the accounting treatment of research and development. Just now we have finished it. So we know that research, anyway, it is not intangible. Development, so the criteria are there. We have to see whether it meets the criteria or not. So expenditure on research, market research, and employee training cannot be capitalized. You cannot capitalize research, market research, and employee training. Cannot be capitalized. So they must be written off to profit and loss. Employee and training is anyway, it's an expense. In relation to development activities, how much is the development activities? If you see, it is just 0.9. The others are anyway expensed, solved. What about 0.9? So in relation to the development activities, 0.9. How 0.9? 4 months of 0.9 was incurred before the product was known to be commercially viable. This amount must also be written to profit and loss. Hold down. Again, let us read this. 4 months of 0.9. Okay. Why 4 months? Starting from 1st Jan to 1st May. Jan, Feb, March, April. The 4 months. It was incurred before the product was commercially viable. You see, not until the market research indicated that the product was likely to be profitable. That's why the first 4 months expensed, after that only you can capitalize it from 0.9. So 0.3 will be expensed. Okay. So how much will be the total expense? Not 2 million. 0.5 research cost, market research cost, employee training cost, and now the 0.3 development activity. So total 1.4 million must be written off from intangible assets to profit and loss account. That means written off from intangible assets means you need to deduct it. You have to take it out from the intangible asset. Because remember, you have recognized the full cost 2 million as intangible asset. Now take off 1.4 from the intangible asset. Therefore, you debit profit and loss account 1.4 million is an expense. You credit from intangible asset. It was debited 2 million. Now you credit 1.4 million. Okay. So the intangible asset recognized on the statement of financial position will be 0.6 million. This will be the intangible asset. From 0.9, 0.3 is an expense. The balance 0.6 is intangible asset. Right? No amortization will be charged because the product is not yet complete. So you cannot amortize it. Remember, amortization only begins after the product becomes available for use, after it is completed. So that's it for IAS 38. And IAS 38 is also another standard which very frequently comes. Some standards you see, they always come. IAS 38, IAS 36 impairment, then we have IAS 16, property, plant and equipment, IFRS 5. Some standards always come, some standards have They come, they might not come, but this is one of those standards which comes regularly, right? IS 38. So be very prepared for this standard. So see you till then. See you in the next standard.